Hello everyone, welcome to my presentation on taxation, income, property, and sales taxes. My name is Octavio Ramirez. This is for class MPA 585 Political Economy for Dr. David C. Powell for California Baptist University. So this is just a little overview of my presentation. I'll be talking about three types of taxation the government uses in order to raise revenue and provide those goods and services for our society. These three types of taxation are property taxes, income taxes, and sales taxes. Also, I'll be talking about different taxation distortions caused by human behavior, as not every human being is happy of taxation, and it has always been an issue since the beginning of the United States. That's why the United States gained its independence from England, as they were having some taxation without representation. Okay, so we're going to start with income taxes. This is mostly used by the federal government. It uses this to raise revenue in order to be able to fund for national defense and public safety. It's one of the main, mostly used by economists and the government to measure someone's capacity to pay certain taxes, as we're trying to have some kind of fair taxation. The second one is property taxes, and these are mostly used by local governments in order to fund for local services as education and law enforcement. And then next we have sales taxes, which in most of the times is used, for example, the one on gasoline is implemented by the government in order to kind of encourage people to use less gas, drive less, and walk more. There's also luxury taxes on expensive items charged to those who purchase those expensive items, and there's also the sin taxes, which the government uses in order to kind of fight externalities, so that, for example, on cigarettes, so these are just taxation on those who decide to smoke, so they pay that fee on the through the taxation, and then they help fund programs that government has in order to fight those negative externalities. Okay, so human behavior is very unpredictable. Those who are benefiting from the services and goods that the government provides may be happy, but those who bear the burden to pay those taxes that provide for the production of these goods and services may be unhappy, as they feel they're bearing all of the burden or most of the burden. So a lot of this taxation are affected by elasticity. So there may be a change in demand, or change in the amount of productivity, or change in the amount of purchasing as well. So in regards to income taxes, people who may choose different careers in order to avoid paying more on their income taxes. They may choose to become monks or start their own churches in attempt to avoid those to pay more on their income taxes. Some of them who are in the workforce may choose to not work overtime, since there's really no motivation, as they feel that their additional income will mostly go towards tax, especially if they don't have many exemptions or deductions that they could claim on their tax returns at the end of the year. So if they really don't have those kickbacks of the deductions and exemptions, then most of their additional income will go towards taxes that they will not get back, and it's mostly going to the services they may not even benefit from. The next one is property taxes. So people have the option to move. They can't move their properties, but they can sell their properties and choose to purchase a property in a different state where they know they're going to be paying less on their property taxes, and still be successful in that new state if they're able to exercise their career and still have a good paying job. The next one is sales taxes. This one is very affected as well by elasticity, since the supply and demand changes a lot based on the pricing. So So if there's the price is too high, and then the additional taxes brings the price even higher, so people may choose to not purchase that item. People may choose to purchase items that have either lower prices and lower tax rates as well. So these are the types of distortions within this types of taxation, and they end up affecting the amount of revenue collected by the government, whether it be at the direct taxation or indirect taxation. For example, as a sales tax. So these are collected by the sellers, and then they write a check to the government of, with the amount of the taxes that people pay for this, for consuming these goods and services. In conclusion, the government implements taxation in its attempt to raise revenue to provide for goods and services, and also in its attempt to prevent negative externalities. However, human behavior is very unpredictable, and those who feel that they are bearing the burden to pay these taxes may find some or look for some loopholes that will help them pay less taxes, affecting the amount of revenue the government raises to in order to provide those provisions for goods and services, and may find the need to implement regulations when it comes to sin taxes and attempts to reduce those negative externalities. Alrighty, so these are just the references I use in order to get the information for this presentation. Thank you very much for taking the time, and looking forward to see you guys' presentations. Hope everyone's having a good weekend.